Here's Stuart Dean, the CEO of GE's ASEAN operations, who's joining us now this morning from Kuala Lumpur. Many thanks, Stu, for joining us today. First of all, again, I talked to John Rice last week and why they chose Hong Kong as a hub and why GE's moving out of the States and to have a strong presence in Asia. What's the opportunity for GE in Asia? Why are you all you guys here actually in town?
Well, we're all about growth in GE, John. By the way, thanks for having me on the program. And obviously, China, India, and ASEAN are some of the fastest growing regions of the world. I have responsibility for the ASEAN region, not quite growing as fast as China, but at 5 to 5.5% this year, it looks pretty attractive compared to the developed countries of the world. We had a terrific year in 2011. We grew 30% in the region, and we anticipate double-digit growth again this year. So that's pretty good, almost double, 2 or 3 times the growth of GDP in the region.
You've got a vast array of businesses, obviously, from a new energy in the windmills, etc., and also right across to the locomotives. I mean, what area of the industry is particularly strong in Asia?
It was really across the board. All the businesses had a good year in 2011. 2012 looks similar, but I think notable was the aviation industry last year. We closed at that point in time, the single largest order in the GE Aviation history with the 200 A320 plane order by AirAsia here in Malaysia. All of those 400 engines came with 20-year long-term service agreements. So really a notable deal. That was followed by a very significant order at Garuda Airlines down in Indonesia, and followed this year with the 230 plane order at Lion Air. So that area is really booming.
And how many new orders do you have in the pipeline this year?
There are still opportunities down the pike at Singapore Airlines, Thai Airways, Vietnam Airlines. So we're going to be pretty busy this year as well.
Now, you've raised the bar, Stu, pretty high. You've got a growth rate of 20% annually for the past 5 years, from a $3 billion revenue in Southeast Asia. I mean, can that be sustained considering the Europeans slowing down, the US has a debt problem, even though it's an election year, and of course, people discussing a Chinese landing, albeit soft or hard?
Yeah, I mean, I think the China landing is likely to be soft. I think the real story about ASEAN is how this region has adapted since the financial crisis. It's not so dependent as it was on exports to the United States and Europe. Intra-ASEAN trade has become more important. Intra-Asia trade has become more important. And they've developed their consumption, domestic consumption, throughout ASEAN as well. So they have multiple pillars for growth. I think next 4 to 5 years, we're likely to see ASEAN growing in the 5 to 6% range. I think that's very sustainable. A lot of that can be self-financed. Liquidity is very strong in Asia and ASEAN. And it's great to see US Exim being very active in this region. Of the 7 countries they're targeting around the world, Indonesia and Vietnam are 2 from this region that are high priorities.
I know that pre-Jeff Immelt, Jack Welch used to talk about how he likes to be number 1, number 2 in the industry, or you fix it so they close it. How hard is it for GE to break into Asia? How many barriers to entry are there? And is it about being number 1, number 2, even though, of course, that was a pre-Jeff Immelt plan?
Well, I think number 1 or number 2 is still a very good strategy, as long as you're defining your markets broadly. You don't want to define your markets so narrowly that you're number 1 or number 2 in a very small market. So we try to define our markets very, very broadly so that we're thinking about opportunities in adjacent markets and being able to sell more to the same customer base, whether they be a national oil company like Petronas or a multi-business company like AirAsia or Toon Group here in Malaysia. So we define the markets very broadly in order to encourage us to continue to grow. So I think we're not limited by how fast we can grow in this market. Last year was the biggest ever in the history for us in selling locomotives in this region, and there's a lot more opportunities to sell locomotives in Malaysia, Thailand, then later on down the road, I think Philippines and Vietnam. Everyone's trying to build out their infrastructure here. I think everybody has seen what has happened with the Arab Spring. People want better living conditions. The standard of living must increase. Infrastructure plays a big part of that. So I think many of the countries here still need to build more infrastructure to, number one, meet the needs of their population, as well as to accommodate growth and encourage still more domestic and foreign FDI into their countries.
Stuart Dean, many thanks for your time this morning. Have a very good week indeed. There's Stuart Dean, the GE ASEAN Chief Executive, joining us now from Kuala Lumpur.